Hi everyone, and we're moving on to our next report today in our accounting project. We're looking at the income statement, and to produce the income statement we also need to produce a supply schedule. So they're the two reports that you're going to do today. Both are linked in with each other. They're pretty straightforward, and we'll walk you through how you are to do that next. So just a summary from last lesson. You need to have the assignment. It's been completely done. It's been marked on all parts. So if we can't find an answer or it's incomplete, you get 0 for that particular part. So you should have already done the questions in tasks 1 to 4, answered those on the worksheet, and have saved those into your Year 10 Commerce folder. You've now also done your task 5 journals in the cash receipts journal, the cash payments journal, the credit fees journal, and the credit purchases journal. And you've also completed now your statement of receipts and payments, and we'll go through the solution very shortly for that. Remember, I've already shown you how to add up using formulas and to transfer balances within the Excel spreadsheet using formulas. So you need to include those in your answers as well to get full marks. So what are we going to do today? So first of all, we'll have a quick look at the statement of receipts and payments, the solution for that. We will then look at, there'll be hints and tips for getting full marks for it, what you should have done as part of preparation for the statement of receipts and payments. We'll then look at how an income statement is structured and a supply schedule, and that's what we'll cover off on today. So here we go. Here is the solution for the statement of receipts and payments as presented in the Excel spreadsheet, how you should have produced it and worked out the balance, the closing bank balance at the end of the period. Okay, so here we go. This is what the statement of receipts and payments looks like. For any report that you do in accounting, you need to title it what you're doing. So this statement of receipts and payments is for the month ended 31st of January 2019. So you need to make sure that that was correct up at the top. Whether that was there or not, that's something that you would do as you produce reports. Then you were given a list of receipts and a list of payments. In receipts, you had capital, you had fees, you had interest, accounts receivable, GST received, which then totaled to total receipts. Now, all of those transactions uh, were all in the cash receipts journal. So all you needed to do was just transfer the appropriate balances into this particular report to get the correct figure for that. There were also a couple of headings there, such as capital and interest, where there was 0 balances. So you could have just written 0 for those and put those in. So the main things that you're looking to transfer out of the cash receipts journal were the fees, the accounts receivable, and the GST received. Now, you shouldn't have just transferred the items in. You shouldn't have just written them down out of the journal. You needed to make the spreadsheet transfer them in. So if we highlight fees, 1,418, it refers to the cash receipts journal equals CRJ E15. So what that's telling us is CRJ, cash receipts journal, E15 is the cell where the fees reside, or the total fees reside within the cash receipts journal. So you either within this statement of receipts and payments type equals and then scroll to the cash receipts journal and highlight the total, or type plus and do the same thing. You can use equal or plus, it will achieve the same thing. So if you have a look at fees, if you have a look at accounts receivable, if you have a look at GST, they all are a reference to a total for the particular receipt within the cash receipts journal. And as we discussed the other day, they all go in the first column. So column C with the dollar sign, they all go into the first column. Then if we look at total receipts, that should have automatically calculated for you. So you don't do anything with that because there's a formula there which is equals sum C6 to C10. So what it's doing is summing from the capital, which is 0, all the way through to the GST, which is 142, and putting the total of 7,610 in total receipts. So you didn't need to do anything from that point of view. Cash payments was exactly the same, but you were going to your cash payments journal, and the items listed under cash payments were advertising, supplies, utilities, accounts payable, drawings, GST paid, and other expenses. They're all in that first column with the dollar sign that's heading it, and they are all added up. They all add up to the total that's in total payments. So if we have a look at the total payments, it shows sum C13 to C19. C13 is where advertising is, through to C19 where other is. That total amount of advertising, supplies, utilities, accounts payable, drawings, and GST paid and other are all added together to give us our total payments figure of 2,997. Then directly under the 2,997, we have cash surplus or deficit. That is adding the total receipts and subtracting the total payments to give us the balance or the surplus, which is $4,613. Then we were given opening balance of $10,000. The closing balance has to be the surplus that we made for the month of 4,613 plus our opening bank balance to give us a closing balance of 14,613. So that is the correct answer for this statement of receipts and payments. So the only thing I would recommend again is that those that haven't used formulas to actually reference back to the journals, go back and change those rather than putting in totals into your cash payments and cash receipts to make sure that you get full marks for this particular part of the project. So let's move on and look at today's report, which is an income statement. So an income statement measures whether a business has made a profit or loss over a given period of time. So like the statement of receipts and payments, we're looking at the month of January 2019 here. So it's an income statement for the period ending 31st of January 2019. So how do we work out whether we made a profit? Profit equals the income that we receive in minus the expenses. So income is revenue earned, not just received, and it is it's income. It's income that you've earned, not contributions into your bank account or less drawings from your bank account, like your statement of receipts and payments is. This is revenue. So in the case of Gill's garden business, it's him earning income from his particular customers, and he's either received them as cash jobs and he's put the money into his cash receipts journal, or he hasn't received the money yet, but he's issued an invoice. This is classified as income that has been earned. As soon as he issues the invoice, it's classified as earned income, even though he hasn't received it yet. Then when he receives it, the money goes on his balance sheet from accounts receivable, then into his bank account. But it's treated from an income point of view as being revenue earned when the invoice is raised, not when the money is received. Similar, it's the same with expenses. So expenses are expenses incurred, not just that have been paid. So sure, there'll be expenses that are paid out of the cash payments journal, but there will also be expenses in the in the credit purchases journal where you have incurred the expense and you must pay your supplier at some stage in the future, but it hasn't come out of your bank account yet. We treat it from an income statement point of view as being an expense when you are given an invoice and you promise to pay that person. That then goes into your income statement. So the income statement requires a little bit more work than the cash receipts journal. Cash receipts journal, we only looked at two journals. So we looked at the cash receipts journal and the cash payments journal. So to put our income statement together, we need to look at the four journals. So we need to look at the cash receipts and cash payments. We need to also look at the two credit journals for us to correctly put the income statement together. So stop the video and take notes as we're going along, as I look at each of the journals, so you can look at which columns are going to be included in your income statement. It gets a little bit complicated as we go along, and it's the first time you've done it. So I'll explain them and point to the particular journals, tell you which columns go into the income statement, and that'll make it easier for you to actually put the income statement together. So for something a little bit different, we'll start with the credit journals rather than the cash journals. You looked at the cash journals yesterday. So first up, we'll start with the credit fees journal. Okay, so let's look at the credit fees journal first. Here we go, and we can see that on the 23rd of January, we raised invoices for 4 customers for fees, which were for us doing gardening or whatever it was. So there was 1,600, 2,200, 2,000, 1,900, and we've got a total down the bottom of the fees column of $7,700. Then we've also got GST of $770 because we have to charge GST. That's the government requires us to do that on income that we earn. So the amount that our customers, buyers Mark Jones, KC Hi-Fi and McReynolds, are going to pay to us is the $7,700 of fees and $770 GST, being $8,470. What happens here is that what goes into our income statement, well, the 7,700 goes into our income statement. It's credit fees. We've issued invoices, so we are going to receive income from these particular clients. They've promised to pay us, so we've earned that income. We haven't received it as cash in our bank account yet, but we have a promise to pay, so it has to go into our income statement for the particular period that we're reporting on, which is January. So the 7,700 definitely. The one thing that's different from the cash receipts journal, the statement of receipts and payments compared to the income statement, is that GST is not included in income statement. The simple reason that that happens is the GST isn't our money or isn't Gill's money. It's money that we're collecting on behalf of the tax department. We collect money on behalf of the tax department and we pay out GST as well. So we have to account for that separately, and that's beyond what we're trying to do in this Year 10 course. But we just do not include it in our income statement because it's not our income, it's the tax department's income. So in the credit fees journal, we include $7,700 as income into our income statement. Let's now look at credit purchases journal. Okay, so credit purchases journal, these are items which we've purchased on credit, so we've promised to pay, so we've got an obligation to pay, so we've incurred those expenses, so they have to go into our income statement if they are expenses which have been incurred in the process of earning income. So let's have a look at the columns. We've got vehicle expenses $783. That's definitely an expense, so we should be looking to transfer that into our into our income statement. Equipment repairs, we have to repair our equipment to mow the lawns properly, so that definitely would have to also go into our income statement. And then there's no other expenses, so that column is a 0, it doesn't get transferred in. We've got an amount there for GST of $180.80. Again, it's GST that we've paid to another supplier or will pay to another supplier. It's a promise to pay, and they will account for that with the government. So it has nothing to do with how we run our business. So it doesn't go into our income statement. It's not an expense of our particular business. It is transactions on behalf of the government. So just always, when you're putting together an income statement, make sure the GST doesn't go in. Accounts payable is the total amount that will be payable for to our credit purchases. It's not an amount that goes into the income statement, it's a total of those other columns. So you ignore that as well. So they're the items from credit purchases. We now get back to the journals that you should be more familiar with. So we'll start with the cash receipts journal. Okay, so this is where you need to be a little bit careful in the cash receipts journal. There are a couple of items here which don't go into our income statement. So if we have a look at the first column, we've got accounts receivable where we have received cash from our suppliers. So we had previously invoiced those suppliers and that was showing up in our credit fees journal. Now they have paid us. What we do not include this in our income statement. We include it in our statement of receipts and payments, but we don't include when our customers actually pay us if we have previously invoiced them on credit. If we've invoiced them on credit, that is when we pick up income when it's been earned, rather than when the amount has been received. So accounts receivable is not included in the income statement. Fees, however, these are cash fees, so they're not fees where we have invoiced the customer. This is where we've just done the job and issued a receipt and they've given us the cash. Definitely that gets included, $1,418. There's nothing in the other column. And again, we have our GST column here. GST is not income from our perspective, so we definitely don't put in the figure for GST into our income statement. So we're looking at fees, as in cash fees, go into our income statement, this $1,418 figure. Okay, so last journal to look at is the cash purchases journal, and then you can go ahead and produce the income statement. And here we go. So here are the columns that we need to work on. So what we've got is we're looking at advertising. These are all cash payments. So advertising for your business definitely goes into your income statement. So you need to transfer this amount in. Utilities for running your office would also need to go into your income statement. $180, you need to transfer that in. I'll come back to supplies. If we look at other, and we look at other expenses, $512.07. The expenses that we're looking at, there's interest on a bank loan and a light for the trailer. They're both expenses for your running your business. So the $512.07 would definitely go into your income statement. Now, drawings. Drawings are amounts that you've taken out of your business to live on. So they're not actually an expense in running your business. So the $800 drawings is not an amount which would affect your income statement and whether you make a profit or loss. Accounts payable also is the same as accounts receivable on the income side. This is you paying suppliers that you've previously been invoiced for. So we include the expense when it's incurred, so it will be in the credit purchases journal, not when we actually pay that supplier, which is what accounts payable is. So make sure you put a cross beside the $861.30. And the GST, as we've discussed, the GST is the government's money. It cannot go into our income statement as revenue or as an expense. So they're those items. Now, if we go back to utility, so if we go back to supplies, what happens with supplies is that we use up those supplies over a period of time and on a number of jobs. So we can't just include the $170 worth of supplies that we've purchased during this particular month. What we have to work out is how much we've actually used. So each month we'll have supplies that we start with, we'll then purchase supplies, and then we'll have supplies at the end. So the simple formula will then work out how much in supplies we've actually used to complete those jobs during the month. And I'll cover that in a second. So supplies doesn't go directly into your income statement, but you need to do a separate calculation to work out what is the value of supplies that you need to include within your income statement so you've got the correct figure for the month. So let's have a look at an income statement and see what it quickly looks like. And here we go, pretty straightforward. So you need to transfer the items. You've already been given the headings under income and less operating expenses to work out what your net profit is. And you put the totals in the orangey or buff coloured column there, and the totals then will automatically total across into the income, total operating expenses to then work out what the net profit is. So just quickly looking at the income statement, it has the heading for the month ended 31 January 2019. So that means we're doing reports for the month. So we're looking at the profit and loss statement for the month, the income statement, and we've got under income, we've got cash fees. So from your cash receipts journal, we've then got credit fees from your credit fees journal. They both go in, they will be added together and you'll automatically get a calculation there. We've then got equipment repairs and maintenance, motor vehicle expenses, advertising, utilities, interest and supplies, which you all need to put into that column. They'll total into this particular cell here, D16, and then D9 will be D16 will be taken away from D9 to give us our net profit figure here. So it's just so we just need to look at how do we calculate that supplies, and then you'll be ready to go. So the last little piece here is what does a supplies schedule look like, and this is how you need to calculate it. So all you've got to do is just work out the amount of supplies you're using in doing your gardening job in the particular month, and then that goes into your income statement. So supplies you've purchased aren't an expense when you buy them, because you may not use them all in the period when you're calculating the profit. So our income statements for the month 31st of January 2019. So we want to find out our supplies on hand at the beginning of January. Then we want to add supplies purchased during the month, excluding GST. So it's the excluding GST amount. And then we take away supplies that we've got left at the end of January. So supplies that we haven't completely used yet. And that equals the supplies that we've used for the month. And this is the amount that goes into the income statement. So that's fine, but where do you find the information? Well, it's all in your accounting report. So I'll show you what pages to find the information now. So in task 1, in your worksheet for Gills Garden Gurus, you had to do an analysis of the opening balance sheet, and if you have a look under assets, the second item down was supplies, $500, and Gills Garden Gurus balance sheet was headed 1st of January 2019. So this is our opening balance for supplies. So make a note of that figure. Okay, we now need to look at how much purchase of supplies we purchased during the month. Just having a look at the credit purchases journal, there were no purchases of supplies on credit, so the only other place that you could have purchased it was going to the cash payments journal. If we have a look in cash payments journal, we can see under supplies that we purchased $170. So that's the amount of supplies we purchased for the month. So that's the second item to put into your calculation of supplies used. And finally, for how much supplies were left at the end of January, go to task 6 in your report, and you'll see first line, Gill wants reports prepared for the end of each month. At the end of January, there were $50 of supplies on hand. So with that, you have all the information you need to put together your supplies report. And if you have a look down at the end of the income statement, you'll see you've got the supplies schedule there. It's already got the on-hand figure at 1st of January, $500. You need to transfer in the purchases figure to give you the total available supplies. And then you need to put in the amount of supplies on hand at 31st of January. If you put the two items into the two bone-coloured boxes there, the other items are formulas, so they'll automatically then calculate what your total supplies is used, and then you transfer that into the income statement just above it on the same tab of your Excel spreadsheet. So that's it. Apologies, I know this was a long video, but there's a fair bit to cover today, and income reports, income and expenses are a hard area to cover, so it was best to go over it a little bit slowly. So it's now your turn. If you can put together your income statement and email your net profit figure and your supplies used figure to Mr. Windley or Mrs. Clement, and then that will finish us for today. So good luck. We'll both be in Google Hangout to chat with you if needed. Otherwise, we'll see you for the next lesson. All the best.